You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Bitcoin, Ether, Ripple, Litecoin, and more. Cryptocurrencies and other digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity, provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments on everything from coins to tokens, futures, and even OTC options. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. The Crypto Rundown is brought to you by Acuna Capital. Known as the new wave in tech and trading, Acuna is a leading derivatives market maker in traditional asset classes. As one of the first trading firms to make markets on Bitcoin futures, Acuna is also proud to be an innovator in the cryptocurrency space. Through a collaborative flow of knowledge between developers, quants, and traders, Acuna designs and implements their own low-latency technologies, trading strategies, and mathematical models. To learn more about our rapidly growing firm, please visit acunacapital.com. Now it's time to dive into the exploding world of cryptocurrencies and digital assets. It's time for the Crypto Rundown.
All right, everybody. That music means it is time once again for the Crypto Rundown, the program where we break down all of the craziness and madness, and there's quite a bit of it this week, over there on the crypto side of the fence. Going to talk some Bitcoin, maybe a whole bunch of other ones in there as well, some ETH and Litecoin and XRP and all that good stuff. So it's a fun one, and a lot is popping off in this side of the fence. My name is Mark Longo. Hope you've been enjoying all the great content coming at you. We were, of course, at a bunch of conferences recently, at the OIC conference. That stuff's hitting the network now. Followed shortly thereafter, of course, before that was the Swan conference. That stuff hit the network already. And then we were at the Trading Show Chicago last week as well, where we spoke to a lot of interesting guests from the world of crypto. And that content should be unfolding on the network all throughout this week and in the coming weeks. I've talked to a lot of people in the last couple of weeks, listeners, all for you guys. So hopefully you guys are enjoying it. One of the people we ran into at that show was our good friend, Mr. Bill Ulivari. He's over there, the principal at Senecal Capital Management. Of course, he's also holding down the hot seat over there at Athena Trade as well. And I thought, since we were talking to him in person, let's get him back on the show to break down all the madness in the world of crypto. Bill, welcome back to the Crypto Rundown, sir.
Mark, thank you for having me back. It's awesome to be here.
How was your conference last week? How was the show for you, sir? The not Traders Expo, the Trading Show Chicago, I should say.
You know, I got to be honest with you. I really enjoyed it. It wasn't a complete madhouse over there in terms of the number of attendance, but it was still, well attended. And I think, again, now that the bear market has taken a lot of the steam and speculation out of the cryptocurrency and Bitcoin market, blockchain technology, that the conversations just keep getting better and better. And so I really enjoyed it, and I enjoyed some of the the handful of presentations that I attended.
Yeah, my conference experience is usually unique. It was pretty much exactly what you saw. Me at that table talking to a bunch of people for a couple of days. That's usually how my conferences tend to go. So I get my own conference. I have my own little meetings with people, which is fun. The meeting of the minds.
They say the best networking actually happens outside of the rooms where people are chatting. So you probably were in a great spot to have a conversation that I might not have been able to have. So I think you were in a good spot.
We did have some good conversations, and it led to a lot of great guests, including our next guest. So let's get to it with a little bit of the old crypto hot seat.
Forget about cold storage. It's time to turn up the heat on thought leaders from the world of cryptocurrencies and digital assets. It's time to take their place on the Crypto Hot Seat.
All right, everybody, welcome to the Crypto Hot Seat, the portion of the show where we welcome on guests from throughout the world of crypto and crypto derivatives and proceed to pick their brains for the benefit of you and because it's fun. And joining us next on the old crypto hot seat, he is a newcomer to the show and indeed to the network. He is Jeff Dorman, the CIO and partner over there at Arca. Jeff, welcome to the Crypto Rundown program.
Thank you, Mark. Thanks for having me. Looking forward to this.
And Jeff, as we are wont to do with all of our first-timers here on the network, why don't you go ahead and give our audience a little bit of an overview of your background in the financial markets and indeed the crypto space, as well as what the heck it is you guys do at Arca.
Sure. Well, I'll start backwards here. Arca is a full-service investment management firm offering institutional caliber products for sophisticated investors, allowing them to confidently gain access to digital assets, both as an asset class as well as using it as an infrastructure to wrap all other asset classes. And I myself, about a 20-year veteran in financial services. I started my career as an investment banker at Lehman Brothers. Slowly from there, moved into trading. I was a sell-side trader, trading fixed income and equities for Merrill Lynch, and then went to the buy side and worked for Citadel and a couple other smaller hedge funds, mostly focusing on event-driven and opportunistic type hedge fund strategies. And then about 5 years ago, took a little bit of a break from asset management and went into the fintech world. And I helped to start and run a company called Harvest Exchange, which, for a lack of a better words, is basically the Facebook for investment managers. And it was during that time that I started working with developers every day, really learning about open source code, and started to see some of these developers in action, mining for Bitcoin and Litecoin and everything else. And ultimately that led me to not only investing personally, but ultimately starting a company in crypto.
That's interesting. I always like to ask people, particularly like yourself, who come from traditional financial backgrounds, what it is that lured them to the dark side. It sounds like for you, it was just being surrounded by programmers all day. They tended to be early adopters of the crypto asset class, and it sounds like they lured you to the dark side there, Jeff.
Well, I would say that's certainly what made me aware of crypto, but I think what lured me to the dark side was really the events of 2008 and even 2011. When you are sitting there every day in the trenches trading or investing, when you're watching all these systemic risks unfold around you and there's literally nothing you can do about it, when you're more concerned with who you did the trade with and who you have counterparty exposure with, and not necessarily what you're doing the trade in, I think that ultimately set the backdrop for why I started to become a little bit disparaged with the current financial system. And maybe I didn't know at the time that it would lead me to digital assets. I think certainly that was what ultimately got me there before I even learned what it was.
No, that's true. Everyone always brings up the counterparty risk and all those other issues, custody risk and things like that in the crypto space. But you're right. In 2008, we saw that play out pretty plainly in the broad, shall I say, traditional financial markets as well, didn't we, Jeff?
Yeah. For sure. I mean, those were scary times. I mean, I know a lot of people in crypto are young. I wish I maybe was a little younger, but the experience I gained from those decades of watching it live in other asset classes really stays with you. And it was, you can't even really, sugarcoat how difficult of a period of time that really was. And we got through it. Ultimately, some of the government decisions were probably short-term band-aids that they never expected to still be with us a decade later. But it was, those risks were real, and they're going to pop up again at some point. You can only tape those over for so long before they start to rear their ugly head again. And I think there's a subset of people out there who are still in the traditional markets who are very well aware of that. And there's certainly a majority of people probably here in the crypto and digital asset world who are, protecting themselves even further against that.
Before we go any further, I have to ask you, ever since I saw you were announced on the show today, it's been lingering in the back of my mind. I know it's occurred to Jeff. It's pretty much anyone who's been around the traditional financial markets for a while. We know a firm named Arca already. It's part of NYSE now, NYSE Arca. It's even spelled the same, ARCA. That's, of course, the old archipelago that got molded and acquired into the ever-evolving NYSE and now ICE arm. So I'm curious. You're obviously familiar with them too. Why did you go with the name, the exact same name and the exact same spelling for your firm?
Sure. Well, I'm much more of the risk manager and the investor than I am the marketer. But Arca means fortress in Greek, and clearly, when you're thinking about digital assets and security and trust, a powerful name like Fortress certainly rings true. But look, most of financial services is about branding and trust, and we certainly have no problem building a brand based on a name that people already recognize and feel that same strong feeling towards.
That was definitely done intentionally. Then you wanted to remind people about the NYSE Arca and all that stuff there.
For sure. Like I said, I manage the risk. I don't make the marketing calls, but I think it's served us well so far, and I look forward to Arca becoming a new household name, on the footsteps of other giants.
Yeah, Jeff. I just want to tag on to what you said, that many people don't realize just how bad that financial crisis was back in like the end of 2007, beginning of 2008 and 2009. I was giving a presentation on blockchain and financial services to an evening MBA course here in Chicago. So we had about 30 students in there. They were taking night classes, studying for their master's in business. And one of the kids in the back says, I remember the 2008 crisis. It really wasn't that bad. And I asked him, I said, well, how old are you? And he goes, well, I'm 25. And I said, well, you were like 14 and a half when this thing. You were still like playing with Pokemon cards, like when this started to unveil, and you don't know how bad it really was just because of your age. And I think now we kind of have this generation now of investment advisors and financial services people that were, they were studying for their MBA, or they were young when this crisis hit. And it takes older guys, quote unquote, older guys like us to really appreciate just the magnitude and the severity of what it was that we went through, because today's generation really doesn't fully understand, I think. And that's, I agree with you. It was bad.
Yeah, I completely agree. And I think, I joke with people sometimes that it took me maybe 6 months to learn how to really break down a balance sheet and understand how to invest in a company. And maybe it took me 12 months to really understand how to trade, but it's taken me 12 plus years to learn how to manage risk. And there's no shortcut to that. I mean, you can't learn that in a book. You can't learn that from talking to people. You have to learn that from living it and making your mistakes. And I remember reading a tweet maybe 6 months ago when somebody wrote, I think it was Ari Paul, said something like, a lot of crypto investors just learned a lifetime of experience in the last year. And I was thinking to myself, well, that may be true, but there's also a lot of other people who already learned 20 years or 30 years of experience before the last year, and there's just no replacement for having seen that before, because history does repeat itself, and there are certain ways to react to situations that you can only really know how to do if you've done it before. I mean, case in point, when the Bitfinex Tether, actually, this was not the Bitfinex Tether, when the Binance news happened last week, right? The first thing I heard was Binance hack, and you had probably, I'm going to say, an hour between digesting that news and before the market really started to sell off. Now, obviously, it turned out that the sell-off was short, but my first reaction was to buy Bitcoin puts. And we did that quite a bit at our fund because that was the best way to protect our clients and protect our assets just in case of calamity without putting a lot of capital at risk. And I'm not sure that's a reaction that everybody has, because they might not have had to be in that scenario before, or have to react to those sort of situations before. And I'm not saying that I'm necessarily the best at this either. Obviously, we all have different strengths and weaknesses, but again, these are things that you want to anticipate ahead of time through practice, in the same way that a cornerback or a quarterback or a basketball player is already anticipating what's going to happen because they've practiced and seen it so many times before.
Yeah, I used to say that managing risk wasn't about managing derivatives; it's about managing ego. And so, whether you're battling against yourself in position management, or you're a risk manager for a large proprietary trading firm, it's ego as well as the numerical derivatives. But yeah, no, good work.
Yeah, I agree with that too. I actually have a funny little anecdote. I remember when I was a 26-year-old trader back at Merrill Lynch. I'm guessing this was 2006 or 2007. And, I had to be an understudy for a year and a half with senior traders who had been doing this for 20 years before I did. And I had two people that I was backing up. And one of them, when he went on vacation, said, yeah, do the best you can, really learn from it. And the other person, every time he went out of town or left the desk even for a couple hours, he would say, Jeff, what do you do with my risk while I'm gone? And I would say, absolutely nothing. And he said, yep, that's right. And that was his way of training me. Was he didn't want me touching his risk. He wanted me to watch and study, but he did not want me to touch it, right? It was his risk, and he wanted me just to learn from what he was doing, not try to do it myself. And again, it's because of that ego thing that you mentioned. I remember when I lost $1 million on the Merrill desk for the first time ever. It was the same week that I had actually just made $2 million for the first time ever. And I remember when I made the $2 million, everyone's high-fiving me. They're like, hey, welcome to trading. You finally figured out how to make some real money. And one of the senior traders, 55 years old, came up to me and said, the question isn't whether you were right or whether you were wrong. The question was, should you have owned that much risk in the first place? Whatever it took you to make that $2 million, was that too much risk because it could have gone against you? And, I laughed it off because I'm young, I'm excited, I just made some money, I'm starting to get a little notoriety in the firm. And then sure enough, a week later, I lost, more than half of the money that I just made. And those kind of, pep talks and learning experiences really shaped the way I manage risk for the rest of my career. And I think that some of the, people in crypto, because it's been so easy to get into on their own, so easy to just, get on a Binance or Coinbase and start to make some trades, they maybe lack that, a mentorship, or lack that senior leadership to really guide how they're going to manage risk and how they're going to invest in the future. So I encourage everyone listening to this to, seek out some people who have done this before in other asset classes and not dismiss them as dinosaurs, but really learn from them.
And Jeff, you kind of touched on it earlier. I want to kind of hit on that for our listeners as well. You mentioned hedging with your funds and things. Obviously, you guys run some crypto and digital-oriented hedge funds over there, but you're not just kind of buying and holding BTC. What is it exactly you guys are trading? Walk us through the different funds and what you guys are doing over there.
Sure. So yeah, Arca has two sides of its business. One side, like I said, we are actually creating new blockchain-wrapped products. The other side of our business, we're actually investing in digital assets. So on the investing side, we have two strategies right now. We have a digital assets fund, which is a event-driven, long-only fund capitalizing on just tokens and digital assets that trade frequently. And then the other fund we have is an opportunistic fund, which is a little bit more off-the-run opportunities, longer time horizons, as well as even the equity of some blockchain companies. So with regard to the digital assets fund and the tokens that we're trading, we really take a top-down approach to what we see in the world, what we're seeing from a demand-supply side, what we're seeing from other asset classes, like obviously the trade wars that are going on right now and some of the debasement of other currencies. But every investment we make is bottom-up. We have a real research process and a real investment committee where we are trying to analyze the risk and reward of each of the investments we take. And we spend a lot of time ensuring that we size these positions correctly so that we are not only looking at how much we can make on these trades, but obviously protecting against the downside as well. And I think that's a key tenet to risk management and professional management in general is protecting against that downside, not just looking for that upside.
And you mentioned the derivatives before, so it sounds like you're clearly utilizing those. It sounds like OTC options, maybe some of the listed futures as well. What are you guys using on the derivative side?
Yeah, we generally are using Bitcoin and ETH options right now. As this industry and this asset class matures, we will obviously explore and utilize everything that we can to our advantage. Part of the fun and also frustration right now in this space is it's not just as easy as it is starting a long short equity fund where you sit down in front of a Bloomberg and you get your fund administrator and your prime broker and you just, get set free to start trading. There's a lot of operational due diligence and setup right now in terms of finding the right counterparties, finding the right tools and services to use, express the investments the way you want. But we're utilizing quite a bit of them, and I'm sure we will be utilizing even more of them in the future.
And we're going to be talking a lot more about all this good stuff in the future. I know our listeners are champing at the bit, Jeff. They want to get into the big moves that are going on in the space right now. We've set the table. Let's get right into it. It is time to move on into the Bitcoin breakdown.
It's time to explore the latest trading activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody, welcome to the Bitcoin Breakdown. Ever since we launched this show at the beginning of the year, people have been writing to us saying, especially on the bullish side, obviously saying, when will the worm turn? When, oh when, what is the bullish case for crypto? And for a while there, much of Q1, it didn't seem like there was too much in the way of bullish ammunition in the old chamber. We saw continued testing to the downside, breaking through 3,500, down 3,300, a lot of hand-wringing, a lot of bad news about hacks and people dying without their passwords on their computers and regulatory crackdowns. And it was pretty dark out there. Winter had come indeed for crypto. And now, fast forward a few months, or in this case, just a week. And oh my, how the worm has turned. Since we all gathered here together on the show last week, listeners, a lot has happened in the world of crypto. Let's just dive right into it. We're talking Bitcoin here, so let's get to it. This time last week, we were talking about what an impressive rally it was last week. We saw Bitcoin rallying up all the way to 5,700. It was a couple of hundred handles at that point. Forget about that. Blew that out of the water this week. Now we're up over 2,000 handles. It was coming into showtime earlier today. It was at 78.07. Now it's at 78.38 out there in terms of a spot. Bitcoin up, it was up over 16% at one point today. It's kind of been on a ever increasing upward trajectory over the last couple of sessions. We saw, this is of course these days over 7,900 is at a pretty much a 9-month high, but we first saw it surging on Sunday when it spiked up over 7,500 and people started saying, what is going on out there? It kind of fell off again, back down to about 7,100. Then it got back into rally ho mode again today, up about 15 or so percent. If in case you're wondering, it's up nearly 40% since our last show. So wow, how the worm has turned, at least in the near term here. So we're at the highest levels now since about last July 31st to be precise, of 2018 is the last time we were in this rarefied air. So let's start there. Jeff, you're out there managing a fund through this madness 40% run. We haven't seen a lot of other large major assets move 40% in a week. Certainly, you don't see S&P doing that. So walk us through what it's been like managing your funds over the past week, what you guys have been doing out there, and also in general, if you have any thoughts on what is driving this. I've seen a lot of different prognostication on that front. Feel free to have at it, sir.
Yeah, sure. A lot of questions baked into one there. So we'll do our best here, but hopefully at least the rally resulted in a lot of nice Mother's Day presents for the moms out there.
The crypto moms.
Maybe that's why we sold off temporarily on Sunday before rallying back. People needed some liquidity to buy some nice gifts. But yeah, no, look, it's been a challenge. This is a tough environment. It doesn't matter if things are going straight up or straight down. Anytime you have massive volatility like this, it definitely makes things harder, right? Because you're trying to make long-term decisions and you're constantly being bombarded and jaded by short-term price action. And part of being a disciplined trader or an investor, especially ones with fiduciary responsibilities for their clients, is you have to anticipate and really manage this risk in all types of environments. So, our team, we have a team that is we have a team that's really focused 24/7. So we don't sleep a whole lot. We're constantly looking at what's happening here and adjusting to it. But I think the one misnomer is that you don't see a 40% rally like this every day. And I would say certainly not from a percentage standpoint. But if you look at the overall dollars at risk or the overall value at risk, crypto is still such a small asset class relative to the world that it is still fairly easy to push around. And I mentioned earlier in the show that I spent a lot of time trading fixed income. A lot of that was high yield and distressed bonds and even reorg equities after bankruptcies. And it's actually very similar. You get similar situations where all of a sudden it just feels like there's more buyers than sellers, and the market makers know that if they get caught short, they're not going to be able to replace that risk. So what do? They just move their markets higher. And maybe in the high yield world, you only move your markets higher by 4 or 5 percentage points. But on a $7 trillion global market, that's a much higher amount of assets that just went higher or lower in a short time period with no liquidity or no volume in between. And the same thing's happening in crypto. The percentage moves are higher, but it's simply because the overall size of the market is so much lower that you have to get a much bigger gaps before you get to that new equilibrium.
No, yes, it's been fascinating to watch. I've been talking to a lot of funds out there, and you're right. These are kind of the markets where, if you have a traditional market making background, we've talked on this show and others many times about not getting caught short units. That's certainly a mentality you wanted to carry into an event like that. So the firms that are scrambling now are maybe the ones that didn't have that, shall we say, that traditional upbringing in the space to not get caught short. Sounds like you guys have been working on the OTC options side to make sure that doesn't happen. And you're here talking to me on a day like today, so clearly things must be working. You're still in operation over there. Bill, same question for you, sir. Obviously, it's been just I think the technical term is crazy town over the past week out there. What's been lighting up your tape, and what are your thoughts on what is turning the worm out there, sir?
Well, Mark, the last time we had a conversation, we were talking about how with the price of Bitcoin somewhere between $3,500 and $4,500 a token, that the sell-off from 20,000 to say 4,000 was almost equal in magnitude as the NASDAQ 100's decline from 5,000 to like mid 600s at the low in like 2003ish. And so I think we had people come in at this time period and just start bottom feeding off the these price levels both in Bitcoin, Ethereum, Ripple, Litecoin, and honestly the magnitude of the rally has caught me a little bit surprised. For me, I'm a little bit more of an old school, point and figure chartist. And for me, around 6,000, 6,500 is the top of the 10-week moving average, and here we are out at 7,800, almost 8,000 per token. So clearly, we regained a lot of room in a very short time, but we're still below our bearish trend line from 20,000. So I think anyone that's actually holding it with a really nice size gain might want to consider thinking about your stop loss prices, where you'd feel comfortable getting out, because we're going to see these swings of overboughtness and oversoldness, now until, the end of time. So, make sure that you, don't get too greedy and, probably let a few chips off, take a few chips off the table. But, again, I'm not in this just for the price appreciation. I'm in it for the technology and for what it means for the world. And so, I think this is a great rally, and boy, it's hopefully more to come.
Yes, a lot of people out there celebrating, enjoying, speculating on what the heck is going on out here. Bloomberg had a piece, I believe it was this morning, talking about what they like to talk about the whales out there, saying the whales were moving some coins. It doesn't take a lot to move the market out here. They're speculating that over 100,000 Bitcoin changed hands over the weekend, which is closing in around $700 million. Most of the major quote-unquote whales been moving their holdings out of the major exchanges. But they're still expressing that kind of bullish sentiment out there, tracking all the wallets out there. So speculating that may be why we're seeing this very aggressive turn in the last few sessions here. Again, it is still kind of a thin instrument. A handful of big players control a lot of it, so it doesn't take a lot for them to start moving things around to see some movements in the underlying, and that could be one of the reasons. As Jeff mentioned, at the end of the day, it is more buyers than sellers right now. That's really all you need to know, and that is currently buyers winning the day out there. Let's go check in with our friends over there at good old SKU, aka I should say SK3W, some of the best data out there. If you're not using them out there, listeners. Free plug. I don't get paid anything for this. I just use it a lot, so I want you guys to use it too. They have great data out there. Right now, they're showing the 30-day realized out there, so the 1 month realized is back up again. Yeah, that should be as no surprise to you guys. We're seeing movements in the underlying movement. People always think a downside is volatility, but upside and downside, they both equate to volatility, and that's exactly what we're seeing right now. 1 month realized about not quite 60%, about 57% out there. That's up from about 41 this time last week. So big gap up in volatility as well. No surprise, too, we've seen volume just lighting up the tape out there on some of the major venues like Deribit in particular. We talked for a while there that we've seen some movements, but the corresponding options volume hasn't exactly been lighting up the tape. Not so this week. I saw a big volume out there. I mean, most of the days we talked about recently have been well shy of 20, if not even 10 million out there in terms of, remember, it's quoted in notional. We saw big moves this week in terms of, and big amounts of volume changing hands. On the 9th, we saw nearly 40 million changing hands. On the 11th, 38.6 million. On the 12th was 45.6 million. The big day, though, was on the 10th with about nearly 73 million worth of changing hands out here in terms of options volume, notional value, remember. But still, that's probably the best and biggest day we've seen pretty much, certainly this year. And in terms, it looks like going back all the way, this chart goes back here to December. So it's certainly the most volume we've seen in quite some time out there in Bitcoin options land. Jeff, is that where you're putting up most of your paper as well? Are you guys out there on Deribit, or where are you putting up on the option side? Where are you doing most of your Bitcoin options trading?
Yeah, sure. We don't talk a lot about the counterparties we use, but we like what Deribit offers. The volume and liquidity is pretty good there. We've also been using LedgerX as well as some OTC relationships where they can pretty much price any risk that you are trying to put on. But certainly, I agree with you that SKU is a great resource. We use it all the time. It's up on my screens all day long, and I think it's pretty telling that if you look at the call-put ratio, still very skewed to calls, right? Again, that shows that people are not necessarily using this as a risk management tool or a hedge, but they are really using this to make outright bets on the future appreciation of Bitcoin. So, it's definitely still being used, in my opinion, as more speculative than really as a tool.
Yes, that's definitely the case. We used to have, obviously, the guys from Akuna on here a lot earlier in the show, and they used to talk about how the SKU would evolve, and it was still heavily biased to the calls. And the puts started leading the dance for a while there in all the crypto winter madness, shall we say. But now I'm looking at the June options SKU right now, and it's obviously some crazy prints out there because it looks like the SKU's a little bit all over the place. But the calls have certainly gapped up in popularity since our last show. Hey, go figure, right? We're rallied 2,000 handles. that's pretty much how the skew should be working out there. For a while, their last show was still kind of bid predominantly to the puts. Now we're seeing it's not quite flat, but it's a lot flatter than it was in terms of the puts coming down and the calls getting a little bit more love out there. So interesting stuff out there skew-wise. I know, Bill, the last time you were on, I think you were talking about why we saw that such a predominant bid to the shy of 3,000 and 3,500 range for the puts in Bitcoin was because that was kind of break-even level for the miners out there. And I think there's some certain sense to that. Now we're seeing the bid to the upside. Has all this activity of late, Bill, and the skew and the volatility, is this and just the size volume we're seeing out there on Deribit as well? Is any of this kind of surprising you? It sounds like the whole move of the last week has kind of been surprising to you, sir, and surprising to all of us, really, right?
Well, yeah, I think again, I don't think we're surprised by the rally. I just think that we're surprised that it went from 3,800, 4,000, 4,500 to almost 8,000 in such a short time. I mean, it seemed like we had we put in our low, we traded, rallied back up, we traded a little bit sideways, and now we've just launched like almost like vertical to areas of support that we broke through, about a year ago. So I think that, from a technical standpoint, we're probably, I'm just going to guess and throw it out there that we're near the end of this rally. But I think now for the first time, we're starting to see, at least I'm starting to see some of the conversation in the chat rooms where Ethereum mining and some of the other alt tokens are becoming a little bit more profitable from the mining aspect. And that's what I find really, really interesting because, if Bitcoin is the new gold, then the other alt tokens are like the junior miners. And I would say that I've only seen a couple of, bull markets in gold since, the early 80s that I started in this business. But it seems like right at the peak of the blow off in gold and silver, it's the junior miners that really, really take off. And I'm going to say, quote unquote, the dumb money piles into the penny stocks. And so what I think that we saw, last year, we saw, all the alt tokens just go 100, 10x, 20x, 100x. And now all we're really seeing is Bitcoin rally, and a lot of the alt tokens haven't taken place. So this could be just a legitimate bull market back in Bitcoin, although I would like to see some healthy back and fill, right? Some retracement to some kind of trend line. So again, I think that the bottom is in, but that's just a personal opinion.
What is surprising, sir, is just how much volume is lighting it up on the futures side of the fence right now. We've talked before. They've set some records recently over there on the CME in terms of how much volume. Most recently was about a month ago, a little over a month ago there, beginning of April, with about 22,500 contracts. And it seems like that was the top for a while there. It didn't seem like we were going to threaten that again. And we were doing decent volume, 5,000, 6,000 contracts a day, but not threatening that 22,000 level. And today, forget about it. All bets are off. We were at 25,000 just in the front month alone coming into showtime. Now pushing 30,000 in that front month May contract with another 1,700 or so in the June contract. So total of around 32,000 contracts on the tape right now, which is just blows the doors off the old record. We're over 10,000 contracts beyond that at this point, and the day is not even close to over yet. So we've got a lot more to come in. So all people who've been kind of hand-wringing about the future of the futures, pun intended, and seeing SIBO getting out of that space and wondering if there's a lot of interest in these things, clearly there is, and lighting it up again today out here. Speaking of the futures, we also did see the oft-rumored, oft-delayed, backed getting a little bit more insight into what they have to work with out there. They posted to their blog, their CEO, Kelly Liffler, out there, is posting that they're, quote-unquote, working closely with the CFTC. Everyone knows that. But they are implying there towards the end of the blog post, they said, we'll be working with our customers over the next several weeks to prepare for acceptance testing for futures custody, which we expect to start, for futures and custody, I should say, which we expect to start in July. So that gives a little bit more concrete time frame. People have been kind of wondering what the heck's going on with BACT and some of these other physically settled contracts. That seems to be all the rage in the crypto space right now. A lot of interest in these physically settled products. And at least for now, it seems like they're going to self-certify the way CME and SIBO did with their contracts, and then also start maybe having the rubber meet the road sometime around July. Whether we'll see the products actually listed then or if it take a little bit longer, we'll have to wait and see. In terms of what they're looking to list, they're going to look like a daily settlement Bitcoin future, so a same-day market contract, and then a monthly future which is this is different from they initially announced just the one-day futures contract. So they've obviously added to their proposed offerings out there. Maybe some of that noise also helping to drive up all things crypto out here. I'm not sure. Either way, it's been a lot of interesting stuff going on in the world of all things Bitcoin out here right now. As we keep on rolling, we got a lot of stuff to talk about. There's a lot of coins and digital assets trading out there. So let's keep on rolling and explore the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, welcome to the altcoin universe, the portion of the show where we explore everything outside of Bitcoin, except for this next part where we break down the market cap. Remember, market cap is a little bit dubious these days in terms of how much of the volume is actually that's being counted as actually legit volume. But that said, I think the percentages still hold, or roughly hold, even if the numbers are vastly out of proportion. Of course, Bitcoin's still going to be number one. According to market cap right now, they're at about $138.5 billion. Again, take those numbers with a large grain of salt. Number two, ETH with about $21.5 billion. Number three, XRP, so a distant number three now, with about $13.5 billion. Number four, Bitcoin Cash with about $7 billion. And then EOS coming around out the top five with not quite $6 billion, about 5.8. So Litecoin still hot on its heels there, number six, with about $5.5 billion out there. You know, Jeff, I've been asking a lot of our guests about that data. I'd like to get your thoughts on it as well as we get out here into the altcoin a little bit. You know, there was that report from Bitwise recently that's very contentious in the crypto space, essentially putting out there that roughly 95% of the volume we're seeing going up in the space is, I don't want to say fraudulent, but shall we say miscalculated, miscounted, duped somewhat. I'm curious, Jeff, what are your thoughts on that data? You concur with that? You think it's high, low? What are your thoughts on that report?
I think it's probably pretty accurate. I haven't run the numbers myself, but I certainly wouldn't be shocked if those numbers are true. But I also don't think it's as big of a deal as people think. I mean, this is still a 10-year-old market, and realistically, it's more like a 3-year-old market since up until a few years ago, it was really just Bitcoin. The expectations that this is supposed to be some massive liquid, trade anything at any price the second you want to, those are just wrong expectations. I mean, it doesn't make sense to believe that we are going to be a fully functioning, fully mature market right off the bat. And look, there's faked markets and faked volume everywhere. I mean, Trace has, in the corporate bond world, which again is probably the best parallel to crypto, in the corporate bond world, you have something called Trace, which basically reports the the volume of every trade, but it only reports it in 1 million or 5 million or 5 million plus. So you can fake volume all the time. You do a 5 million trade and you do just maybe 5 million in one, and all of a sudden the dealer runs around and says, I just traded 100 million of these things. And that happens all the time. It's more marketing than anything else. And they're just trying to show that there's activity going on because activity begets activity. So I don't the Bitwise report says. Again, they did an amazing study and probably had an incredible amount of facts to go into that. I think the reaction to it is what's wrong. It just doesn't matter that much. What matters is making sure that you have the right expectations so that you don't go into this market being fooled into thinking that there's some sort of massive amounts of liquidity. And as long as you know that going in, which most institutional investors do, and I think a lot more retail investors are starting to learn, if you have those right expectations, you can navigate in these kind of markets, whether there's false volumes and some less than proper exchanges or not.
Less than proper. I like that. But you're right. It does kind of put into stark relief how relevant some of these numbers actually are. For example, people for a long time dismissed the listed futures market as a small pale shadow of what's going on in the spot market. Now we're starting to see that if anywhere near 95% of that volume is quote unquote miscounted, then these futures actually make up a lot more of the real quote-unquote market than we initially thought. Look at just that report we just talked about with Bloomberg saying it only took 100,000 coins over the weekend in the hands of a couple of whales to really start moving things. Well, we just said 32,000 of the futures contracts have changed hands. Remember, that's a 5X contract, listeners, so that's 150,000 coins. So that's actually a much more substantial market-moving type instrument than people maybe had initially surmised. They kind of dismissed it as just a little side product. But here now we're seeing with these numbers that are real and listed and trackable versus a lot of these other venues that really aren't, starts to put the futures and some of the other derivatives products maybe having a little bit more impact in the space than the naysayers initially said. Let's look across the broad spectrum here of what's going on in altcoin space. Spoiler alert, a rising tide lifts all boats, and that's pretty much what we're seeing across the spectrum of the altcoin universe right now. Where Bitcoin goes, the rest of the market is following these days. A little bit earlier in the show when we were prepping up here, coming into showtime, we saw a lot of these names up big. We saw XRP, not quite big, probably back up to 33 cents, back where it's kind of been flitting in this 30 odd to 33 cent. It spiked up to 36 cents ever so briefly, but it's kind of been floating in that around that 31 to 33 cent range for quite a while. There's been a lot of headwinds on XRP. We won't talk about those again here on the show, but not quite feeling the explosion that some of the others have to the upside. ETH, of course, was up over the 200 level, still up over 200 as we're speaking right now at 202.30 coming into the tail end of the show here, up over 7%. That's up from 175 this time last week, listeners. So another 25 handle rally out there in all things ETH. Litecoin also moving substantially as well. It was 75.5 on our last show, up north of 90 today. Got up to 91 coming into showtime now. It just ticked under the 90 level, 89.97 there. Still up over about 15 handles or so since our last show. So a big move. Remember, if you've been listening to the show, you know Litecoin percentage-wise was the big winner out there from Q1 in terms of rallies, and it continues to do well. We just mentioned the market cap as well, so Litecoin continuing to take a lot of leads out there. Bill, I know you like to look at some other players out there in the altcoin universe in terms of, shall we say, some of the more esoteric coins and tokens that are out there. So what's lighting up your tape this week, sir?
Right. Well, of course, we always have to give that disclaimer that all cryptocurrencies have a potential for loss. This is not financial advice, education only, et cetera, et cetera. But, a couple of tokens that have come across my screen that seem interesting is one called Ravencoin, and the other one is Traceability. But Traceability is really an interesting project because I actually watched a presentation at the Union League Club last year, and a gentleman talked about how the supply chain is really, really important, especially when it comes to food, right? Food recalls with E. coli and listeria issues. And so Traceability is a company that really seeks to be this combination, a hybrid of a public blockchain that guarantees and immutably records private supply chain data, like for food, when it goes from point A to point B, or when the seed is planted to the time it's actually on the shelf. So Traceability has they keep their supply and food product on a private cloud server. For example, it could be something like Amazon Web Services or Microsoft Azure. So it's this enterprise level type of food traceability blockchain that also uses the public blockchain to secure the actual information. So I find that really interesting. And it isn't like I've studied this company so much. It's just that I like the guy that presents. He doesn't try to shill his company. He doesn't try to pump the token. He's just really an interesting and I think an upright guy. And the second one would be Ravencoin. Ravencoin, at first I thought was a joke like Dogecoin, where it was like named after some kind of species that we would find in a National Geographic book or something. But actually, Ravencoin has an interesting tilt to it now that I look at it. While the number of tokens is about 10 times what Bitcoin is, the truth is it has 1 minute blocks rather than 10-minute blocks like Bitcoin, and it's meant to be where Bitcoin was designed to be a peer-to-peer transfer of cash, of digital money. Ravencoin really is a peer-to-peer transfer of value and assets. So I'm still kind of exploring it. The trader in me is like, I don't care what it does. I'm just going to trade it anyhow. So I'm trying to, be a little bit more patient and do my due diligence. But Ravencoin and Traceability token are like my two favorites today.
That's interesting ones. We just had Tony Saliba in here in the studio last week. He's deep into crypto with his Mercury digital assets. And he was mentioning a startup that he was part of that did something with food spoilage. Maybe that's the same one. I'll have to ask him and see if that's the one. But Jeff, you mentioned before trading some ETH options. Is that your primary dalliance in the altcoin universe right now, or do you have some other tokens and other digital assets out there in the altcoin realm that you guys are interested in?
I don't know. We look at the whole spectrum. I mean, we are very good at looking at two different things. We look at long-term researched positions where we believe that the management team or the product market fit or the long-term viability of the project are going to be game changing. So we're looking at those 12 to 36 month time horizons. So a lot of that is in the mid cap and even small cap tokens. And then we also look at event-driven risk, where we can really isolate the idiosyncratic event itself and not take on market risk. Oftentimes when the market is just pricing something incorrectly or not fully factoring in all of the the probability weighted outcomes. So those are the two buckets that we look at, and that often takes us well below the top 10 in by market cap.
Interesting. It must be hard for you guys then to come in because you guys want to do some size. Is there a lot of size available in these, shall we say, esoteric coin? Are you guys pretty much the market?
Sure. No, I mean, look, if we're the market, then we won't be taking a big size. I mean, liquidity and the ability to get out of positions is just as important as making money. So we are not taking bigger positions than we can trade out of. But the OTC markets are pretty deep right now. There's a lot of good firms out there who are providing good two-way flow. There's also the ability to source directly from the project owners themselves if they have some treasury supply. And also, sometimes these exchanges are deeper liquidity than what is actually being shown on the screens, right? With the number of algos that are being run right now, you often can do a lot more directly on the screens than maybe was advertised. So we're able to get liquidity when we need it, and we certainly pay a lot of attention to what that liquidity picture really is before we enter a position.
Yes, clearly, obviously, you don't want to be the only market. I was joking before. If you are the market, then you're right. Definitely want to take a step back from that one. We used to all dream when jokingly back on the day on the SIBO that we wanted to be the only guy in the crowd. But there's a lot of size that comes with that, and a little bit of illiquidity, as you mentioned. So perhaps not the best thing. But interesting to hear you guys are out there playing in some of these more esoteric. I'm assuming that's in the more speculative fund you mentioned at the top of the show, Jeff.
Yeah, for sure. And, sometimes it's also the things that people just absolutely dismiss. This Bitfinex one is controversial, but also something that is just being dismissed by everyone because they don't like some of the actions that Bitfinex has taken. They don't like the Tether debacle. Certainly nobody likes the misappropriation of funds. But, there are parallels to this in the existing financial world. And sometimes the best investments in the world are good company, bad management, bad balance sheet. And that's exactly what Bitfinex is right now. They still make $400 million of annual profits. That's a real company that has real cash flow. And when you have a capital shortfall, what you're supposed to go do is figure out a way to shore up that capital shortfall. And like I said, there's precedent here. We've seen this before. This is no different than MF Global and Jefferies and Knight Capital 10 years ago who had capital shortfalls because of bad decisions, right? MF Global was not able to raise more capital, and therefore they were one of the largest bankruptcies in history. But Knight Capital, after losing $500 million on a fat finger trade, was able to go out there and find new capital, and both investors and the company recovered very nicely. And Jefferies had a ton of bad risk with sovereign CDS, had a capital shortfall. The market was losing confidence in them. They went out there and raised equity from a big investor. And again, both the equity holders and the company did great. So if you can separate your moral compass from actual good risk reward, what Bitfinex is issuing right now with this new $1 billion Leo token is not only brilliant by them, but probably going to be a home run for both investors and the company as they shore up that capital shortfall.
Interesting. Yeah, I said that's been kind of dominating the headlines a lot lately, and you're right. The headlines are all, you look for that name, and it's, you see scam and everything else out there in the headlines, a lot of dire things, but if you can look past that, maybe some interesting opportunities there. Speaking of opportunities, this is our opportunity to hear from you guys, so let's keep on rolling into our final segment. It is time to answer your crypto questions.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, everybody, welcome to the Crypto Questions. This is indeed the portion of the show where you guys take the reins with your questions, your comments, your insights. A lot of people asking this question, as you might imagine, Jeff and Bill, something along the lines of this. We picked this one from JBD, but it could have been a bunch of people who wrote in with similar questions. Pretty much in a nutshell, they want to know, is this the end of the hashtag crypto winter? That's what JBD is asking. By the way, I haven't heard that term crypto winter bandied about as much as I did last week at that conference, that trading show Chicago. Every single person I talked to, the word crypto winter, maybe because some of them are still Game of Thrones obsessed. Certainly a lot of the origins of that term come from that, but still interesting to hear that's such a popular thing. But yeah, looking at this week's action, it's kind of hard not to blame people like JBD who wonder maybe this is the worm turning. Maybe, Bill, we'll start with you. What do you have to say to JBD? Can you say definitively right now on our airwaves, Bill, this is it? This is the end of the winter. The worm has turned. I'm putting a lot of weight on your shoulders, sir.
Definitively? Well, I'll tell you what. I think the answer is yes. I think specifically in Bitcoin. We retraced that same sell-off that we saw in the NASDAQ and other assets over our career, maybe down about 84 to 85%. We have the Bitcoin mining reward, which is being halved in another year. So right now, every time a block is solved, the mining pool receives 12.5 Bitcoin as a reward. And I believe sometime in the next 12 months that reward will be cut in half to 6.25. So that means really we're going to have half the supply of Bitcoin coming out every time a block is solved. So I think, again, this anti-inflation relationship of Bitcoin and the fact that the already 78 to 80% of all the Bitcoin's already been mined, and then what's coming down the line will be half the rewards, half the supply out in the market. I think that I do think the bottom is in, and we have a lot of things favoring higher prices in Bitcoin.
Jeff, you guys manage a lot of funds. Obviously, you probably have a long-term bullish outlook on the entire crypto space, and that includes Bitcoin. What do you think for all our listeners out there who are writing in, thinking is this perhaps the end of the long crypto winter, or perhaps is there still a little more winter ahead for us, Jeff?
Sure, and you're absolutely right. We are long-term bullish. There's no reason to be in this business if you're not. But I hate the term crypto winter. I don't think it makes sense. I think it just exacerbates the feeling that everything moves up and down together. And the reality is, while correlations between digital assets are very high, the magnitude of the returns and the dispersion of the returns is very different, right? If you have two tokens, let's use the Ripple example since you mentioned it. If you have Bitcoin and Ripple, and every day that the market is up, Bitcoin's up 2% and Ripple's only up 1%, and conversely, every time the market's down, Bitcoin's down only 1%, but Ripple's down 2%, your correlation is 1. They're still moving at the same pace every day. But over time, you're going to get those big dispersions where Bitcoin may be up 100% and Ripple hasn't moved anywhere. So the whole idea of crypto winter to me, again, is a fallacy. I think it's more you're going to start to see some haves and have-nots, and the market's going to start pricing these accordingly. You're going to see certain tokens that have massive supply overhangs or just have never figured out product market fit. The tokens just make no sense, and you're going to start to see these things just get stuck in the mud, and they're not going to move with everything else outside of a couple of coordinated pumps here and there. And then you're going to see the ones that are really solving problems, right? They have real use cases, or they have real companies behind them, or people can get behind them, right? That's, certainly we're already seeing that in Bitcoin, but you're seeing it with the exchange tokens as well, right? The exchanges have done an amazing job of figuring out good use cases for those tokens. You're seeing it in the gaming sector, right? Gaming is so primed to be disrupted with blockchain and the idea of not only like NFTs, but also just the idea of moving digital assets around seamlessly. So I think you're going to look back on this a year from now and see that the overall space may not be that much higher, but the ones that win are going to be huge winners, and the ones that lose are going to be huge losers.
Yeah, it has been interesting. People have been waiting for that moment when, the crypto would emerge from the shadow of Bitcoin. Obviously, Bitcoin still leads the dance. It's the major market cap. People measure that dominance rate. Obviously, it's high right now because Bitcoin has been rallying, so it's fairly dominant right now. But people have been waiting for that moment when some of these other altcoin and other things and tokens can kind of get out from under Bitcoin's shadow and start to move a little bit independently. I don't think we're quite there yet, but who knows? Maybe in a year that might be an interesting moment. Obviously, maybe not a Game of Thrones fan there, Jeff. Not a fan of the crypto winter theme, but it has been tossed about quite a bit of late. And maybe that might be the one nice development of this recent rally outside of the price movement is maybe we'll hear that term a little bit less as a result. So maybe you can take some solace in that there, Jeff. We got time. Let's see for one more here. May Diamond wants to know. Does the recent price rally for Bitcoin open the doors for major exchanges to start listing new derivatives products like ETH futures or Bitcoin options? Thanks for this great program. The only folks in the space talking about the derivatives angle. Well, you're welcome there, May Diamond. We aim to please here. And you're right. There aren't a lot of people out there really talking about crypto from a derivatives point of view, which is why we got into this to begin with. So I'm glad you guys are appreciating it out there. It certainly has been fun to bring a new asset class onto the network and certainly there's vol out there. Certainly there's volatility. There's skew. There's all sorts of other things that a lot of our core options audience likes to sink their teeth into. So we appreciate your love there, May, and all the rest of you out there. Keep on listening. As for your question, I've actually put this to the exchange. In fact, if you listened to last week's TWIFO, I put this to the head of crypto at CME. I said, we've seen this is before, obviously, this week's explosion, which makes it even more relevant. And I said, are we going to see more products as a result? And he kind of hemmed and hawed, as you might expect. They don't like to reveal all their secrets to me. I try to squeeze them out of them, but they like to dance. But that said, it does seem like this is starting to pave the way. There's a lot more interest. We could see it anecdotally in the uptick in broad interest in this space as a result of the recent movement. The exchanges aren't fools; they see this as well. We've been hoping. I still am a little bit, not optimistic on the prospect for Bitcoin options anytime soon. But we have been hearing. In fact, we just talked about on the last show that maybe the CFTC opening the kimono a little bit when it comes to ETH futures. So if that's the case, and CME has told me before that they were probably more leaning towards listing more products as opposed to listing the options on the products they have right now. So I think given the headwinds and the interest we're seeing coming out of the CFTC and something like an ETH and what I've heard from the CME before, I'm going to put those two together and say we'll probably see more of the underlying before we see the options on it. But more products is a good thing, I think, for everyone at the end of the day, even though if we're all still waiting for the options. I don't know, Jeff, do you have any inside info here? Do you think we're going to be seeing a lot more new listed derivatives now, given that your favorite term, crypto winter, may be coming to an end, sir?
I think we're certainly heading in that direction, right? I mean, if there's one thing financial firms and creative minds are good at, it's creating new products. So if it's legal and there's liquidity, it will get done, especially out there in Chicago where derivatives upon derivatives are being built every day. So I expect us to see more of it. I think it will only enhance not only liquidity, but risk management. And obviously, the more risk management tools in your toolbox, the more institutional investors come in. So I think in general, it's good for everybody.
Bill, you get the last word on this, sir. What do you think this recent resurgence? Do you think it's going to pave the way for a lot more derivatives products for us to sink our teeth into anytime soon?
Well, I do, Mark. I mean, honestly, as the owner of a niche state-registered investment advisory firm, I mean, we're a Series 65 asset manager. I'm waiting for the exchange-traded fund and the options that come after that. I mean, I know that Bitcoin futures and ETH futures are very interesting, but for me and for my clients, and I manage almost entirely self-directed IRAs, 401ks, and a few small business pension plans / trust accounts for individual business owners, I am not going to touch the future contracts. It's not where my registration lies. I'm not really interested. But when the second this stuff, we see an ETF, we see an ETN where options are allowed and or just I can quickly allocate to an ETF as simply as I can do, SPY or IWM or QQQ, then I'm all in. And so will many other advisors like myself. So I just think we need to wait for this thing to mature. Just like the first ETF that we had was, I think, SPY somewhere in 1994 or 1993. And now we have thousands of them, a decade later, 2 decades later. So it's going to take time, but things progress much faster. And the exchanges are hungry for products to trade. That's how they make their living. So let's get one under our belt, and then the rest will come really fast.
Good point about the ETF. Hey, we didn't even get any questions about the ETF this week, so that's maybe that's a sign of where the interest is going. All the price movement has distracted everyone from asking us about the ETFs yet again this week. Well, unfortunately, that music means we've come to the end of another epic journey through the world of crypto. This was a fun one. We talked all sorts of different products. We talked the crazy rally going on out there, our thoughts therein, what's going on with Jeff and his team over there managing funds out there in the crypto space. An interesting time to be doing just that. We talked Bitcoin, we talked the altcoin universe, talked some esoteric names within that altcoin universe, even answered some of your questions. So it's been a fun time. Glad to see you guys are enjoying the program. But before we go, let me go back around the horn one last time. Jeff, as our guest, I will give you pride of place, sir. If listeners are interested in learning more about what you guys have going on over there at Arca, where should they go? What should they do, sir?
Sure. Well, you can find us at www.ar.ca. You can look at any of the stuff on our website there. Most of it's for accredited investors and qualified buyers, but I think you'll find that our team is pretty receptive, pretty responsive over email and Twitter as well. So feel free to reach out to us and look forward to hearing from everybody.
And Bill, I know you have a lot of different ventures. You're wearing a lot of different hats these days in the crypto and in the old school, shall we say, asset management world. If people want to learn more about you, maybe they want to keep up with your latest endeavors, where should they go? What should they do, sir?
Well, for the investment advisory side, it would be cenaclecapital.com. That's CENACLE, cenaclecapital.com. And if they want to stay in touch on the cryptocurrency and blockchain space, I spend a couple of days a week here at Athena Trade, where we are the Midwest first and only blockchain and cryptocurrency-centric co-working space. So it's great to be in Chicago, really, and it's wonderful to be a part of the show and to talk to people who are involved in the space.
give Bill a follow over there on the old Twitter machine if you want to see some interesting data and talking about crypto throughout the week as well. He's just easy to follow at Cenacle Capital, Cenacle Capital, over there on Twitter. And on behalf of Bill and Jeff, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in your questions, for all the other great stuff that you do. Keep it coming. And we'll see you back here next week for more of the Crypto Rundown.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.